Hey traders, Marcello here, back with you for part 2 of this video series about learning how to day trade. What we're going to cover today is the best markets to trade, whether you're a new trader or looking for a bit of consistency. First part of the video, we talked about the advantages and disadvantages of trading. I know a lot of people always talk about how awesome it is to be a day trader, but I think it's important to be able to realize that there are negative or disadvantages of learning how to day trade as well. You know, obviously the advantages are freedom, becoming your own boss, working from anywhere in the world. I've been traveling and trading for the last 6 years now. The money involved with it as well, right? Everybody wants to make money, but obviously we need to make sure that we have the discipline and patience, the disadvantages as well of having accountability of ourselves, and also even not having the security of a paycheck. So whether you're looking for consistency or a brand new trader, I want to cover these different markets. I've been talking with traders, professional traders that have tried every single one of these. So I want to be able to talk to you a little bit about each market, which one is the best to learn, and also which ones are working right now, because obviously the markets have changed significantly over time. Now, stocks, the two big advantages is the fact that there's a lot of options, right? There are tons of stocks to choose from. There's tons of available information, you know, news programs, Bloomberg, CNBC. A lot of brokers now have a lot of news portals that you can get information from. And that's one of the great things about stocks. Now, the only unfortunate thing with stocks is the fact that there are a lot of disadvantages. First thing being the $25,000 pattern day trading rule, tongue twister. That basically means that you have to have $25,000 to day trade. You know, something, for example, that I didn't have when I first started trading. Lots of options as well is a disadvantage, because obviously you have to do your homework. You have to, you know, spend hours and hours a day looking for the right stocks, scanning the right ones, looking at different industries. You know, you might have to pay for someone to do a watch list, which at the end of the day, if you're going to learn how to day trade, you want to make sure you're going to be able to do it on your own, not pay someone else to kind of do the homework for you. That can be quite time consuming. You know, I know of some people that have switched from stocks because of that. There's a lot of time involved with that. There are a lot of short selling restrictions. Right now we are in July 2014. The next recession vis-a-vis crisis that we expect, that we've talked about on the Day Trading Academy blog, is going to be in 2015. I would say anywhere between August to October, anywhere in there, maybe even September. And so obviously if you're going to look to day trade, you know, there might be some restrictions on the short selling. In other words, the market's going down, right? Because we can make money when the market goes down. A lot of people that are new don't know that. There might be restrictions on that. There's also market manipulation. You know, with the rise of high frequency trading and the algorithms that kind of has come to the forefront, that has really affected the market, not only with erratic behavior, but also with volume. I'll show you some stocks here. This is the average daily volume in the industry. You can see that the volume now is back to 2006 levels, and if things continue the way they're going, you can see the trend that the market has to the downside, how we probably are expecting more and more decreases in volume. The percentage of volume that's affected by the algorithms or high frequency trading. Notice how in 2009 we had up to 60%, and now that's going lower and lower, and that also affects the volume, because obviously more people trading means more movement. The quarterly bank trading revenues, there's restrictions now on a lot of banks and even investment houses of speculating in the markets and using customer funds, for example, to be able to day trade. So they have left the market, a lot of them, which has caused the decreases in volume as well. The next one is penny stocks. Penny stocks is a variation of stocks. Basically, penny stocks is an acronym for the stocks that are, for the most part, you know, they're just valued at under a penny. Or a few pennies even. A lot of these are fraction of pennies, like 0.001 cent. Again, lots of options, right? Lots of options. That's both an advantage and disadvantage. You need very little capital to start. You know, little as $500 or $1,000, for example, to start. And they can be highly volatile at times. So obviously when the market's, you know, when it's highly volatile and it's moving, you can capitalize on that movement. Now, on the flip side, even though sometimes they do have high volatility or a high movement, the vast majority of the times, a lot of these penny stocks are going to have very, very low volume. This has to do a lot with the market manipulation. We made about over 400% return on some of the penny stocks that we invested in, but we were able to do our due diligence with our insiders and invest in an industry that was about to explode, which was the marijuana stock industry. Now, if we're going to learn how to day trade penny stocks, that's something that we have to learn, and obviously that involves a lot of homework, just like stocks. Again, that goes back to scanning, doing your homework. At the end of the day, we don't want to spend 5, 10, 15 hours behind a computer all day. We want to be able to trade on our own for a fraction of that time. There's heavy market manipulation, something in the penny stock industry known as pump and dumps, where people go in, they pump a stock up, and then afterwards they dump it. This also causes a lot of government intervention. There was 2 different stocks that major news this year. One that affected the positions that I was in. Another one that is most recent. I'll show you here. This is CYNK, a company that literally doesn't even have employees, or 1 employee if you quote me correctly, and basically doesn't even have any revenue. It's a social media company. And amazing what happened to the stock. It now has $1 billion market cap, which is incredible. So SEC came in, they halted trading, and there was a lot of people in a lot of forums that were complaining because they had open positions. Now, Grow Life is a marijuana stock that I was invested in, and instead of making thousands of dollars of profit, I was only able to make a few hundred because the SEC, again, government, and they came in and halted the stock. So be very, very aware of that when it comes to penny stocks. E-mini futures, my favorite and main market to trade. A lot of advantages, little disadvantages, very low barriers to entry. A lot of the E-mini brokers have margin requirements as little as $400 or $500. There's a level playing field, right? So there's less market manipulation. You and I are on the same level as other people. There's a centralized exchange. All orders are public. And if you didn't know, the stock market, day trading is a zero-sum game. That basically means that if we lose money, we're giving it to somebody else. If we make money, we're taking it from somebody else. So it's very important to have that level playing field to be able to make money. There's low prep time. We with technical analysis, only looking at charts and patterns and indicators, we can get started in as little as a few minutes a day, do our pre-market analysis, and then trade for an hour or 2. The majority of the day traders or master traders that are trading live with the Day Trading Academy trade for about an hour to a day. Highly leveraged, which means that for every dollar that the market goes up, we can make anywhere between $50 to $100 in profits, which is very, very impressive. Very, very easy market to learn on, especially the E-mini S&P 500. No short selling restrictions. One of the big things that you have to know about day trading is we make more money when the market goes down than when it goes up. So that's very, very important. Now, a few disadvantages, obviously, with higher leverage comes higher risk, right? So we have to make sure that we know what we're doing in the market before we start actually day trading live. And there's also a high degree of competition, which also can be an advantage because if it's a professionals market, so there's good volume, there's good liquidity, there's good movement. Now, on to options, which is a bit similar to futures in that there are less restrictions for trading. There are low commissions. There's also a lot of options when it comes to actual options as well. No pun intended there. But there are also quite a bit of disadvantages when it comes to trading options. Depending on what kind of option you're trading, there might be situations of low liquidity, which means that there's bigger spreads, which means that when you put in an order, in order for you to make money, for example, there's a spread on that and you might not be able to make the money that you wanted. There are higher costs involved, especially, for example, when you compare it to E-mini futures. It is extremely complicated for beginners. I know a lot of traders that just decided to trade other things just because of how complicated it is. It's not available for everything. E-mini futures for the most part is available for most markets, whereas options are not. There's higher indirect costs, and another thing that I don't have mentioned here is that there's more competition. So there's so many variables when it comes to options that there's a lot more market manipulation, and we're on the losing end of that stick, so it's a lot harder for us to make money. And last but not least, Forex. Forex is overall the largest traded market in the world. It's $1 trillion market. The highest single traded market in the world is the E-mini S&P 500, which has to do with E-mini futures. But overall, Forex is the biggest market in the world. There are low barriers to entry. You can get started with $500, $700. There's very low prep time, especially because a lot of the times this is just technical analysis. It's also higher leverage, just like E-mini futures. So technically, you make more money on just a dollar of investment or $500 worth of investment compared to, for example, stocks and penny stocks. It is an easier market to learn on, even though there is more competition, because obviously it's mostly technical analysis. With that, however, being such a big market and being that we're competing against people like the banks and million-dollar investors, there is a higher level of risk. There's a significantly higher amount of competition. There's a lot of bank and government intervention as well, especially with now all of the governments around the world printing money for the most part. And there's no price transparency. So there's a lot more market manipulation when it comes to Forex. So be very aware of that. Even though it's kind of easier to get started with Forex, it's a lot harder to make money for that reason. So that's the end of our second video here, guys, on the best markets to day trade. Hopefully you learned a little bit. This is our video series here. We talked about the advantages and the disadvantages in the first video. This is the current video. Next, we'll be talking about how to set up a day trading business, what you need to get started, how much money you would need to get started, how to find a good day trading strategy. There's a lot of education out there online, even at a lot of books that have been written on the topic. So I want to be able to help you avoid some of the mistakes that I made when I first started trading, losing, $25,000 in a month, all of that, which was student loans. I'll show you a live trading session. We have our day trading center here in Colombia. We're starting one in Brazil as well. So I'll show you some of the trades that our traders make, and I'll give you an example of that. And then finally, part 6, we'll talk about some of the misconceptions about day trading. If you have any questions, feel free to leave a comment or a question here on YouTube. Otherwise, you can visit us at thedaytradingacademy.com, and we'll talk to you soon. Ciao.